Welcome to another video. Today we will be speaking about how you're actually supposed to be approaching your analysis to the market. So I will be sharing my multi-time frame analysis breakdown on a pair, also checking the order flow and how you're actually supposed to be using this information to become a better trader. You're supposed to be understanding which are the key elements that you're actually supposed to be implementing in your own trading strategy. Now, if you're new to the channel, I'm a top author on the TRADINGVIEW platform, as well as running an educational program and swing trading full-time with my students. I will invite you to check the video until the end because it will be filled with value. Okay, so what I wanted to speak about today is, first of all, a full analysis on GBP USD, but specifically I want to keep this, as usual, very educational. So I want to speak about a very specific pattern that you will see over and over again in the market, and it's very, very powerful. It has a very high completion rate and it provides good risk to reward and high probability opportunities. And as you know, trading is all about probabilities and risk to reward. So starting here from a daily perspective of GBP USD, I will first of all speak about the pattern, and then we will be making a full analysis on GBP USD. Now, first of all, the pattern. Okay, the market made a big move to the upside, retracement, higher high. The market went down to retest the previous resistance, now turned support, made a minor push up, then broke the level to the downside, and the market went for a retracement. Now, this is the pattern. Okay, I will draw it here on the side because it's much easier to see it. The market goes up, down, creates a higher high. So as soon as the market creates a higher high, what happens? This level here is previous resistance that is now turned support. And if you remember on TradingView, what did I say? I said, expect the market when it will actually find, it will actually hit the area to find support at it. And in fact, that is exactly what the market did. And then what did we say? We said, since from the weekly time frame, the market is bearish, we want to see this area break to the downside. And after the break, what did we say? All of this analysis was on TradingView. You can go and check it out. We said we want to see the market complete the pattern because we have an information. And after an information, what do you expect? You expect the market to go and test the neckline. And in fact, that is exactly what the market has given us. But why is this pattern very powerful? Because when this information will complete, we will not only have the completion of the information, so basically this previous support, turn resistance, aka the neckline, but we will also have the resistance given by the left shoulder here, or this previous resistance area, and the possibility to create which pattern? To create this head and shoulders formation. So basically left shoulder, head, and right shoulder. And another pattern that is inside of this pattern, so basically this pattern here is actually a combination of patterns. You will have this impulse and correction, and you expect the next impulse to the downside. Now, 8 times out of 10, this pattern will actually complete with the next move to the downside. Obviously, there are times in which the market might actually just break to the upside. We never know if the time will be this one or the next one. Sometimes the pattern fails, but you can test this pattern. This is a very high probability pattern on all 8 time frames. Now, going to our full analysis. Let's start from the monthly time frame. Daily, we check the COT data. We just give a quick look at the monthly. We check the 4 hours and we see what kind of conclusions we can take on this pair. So let's start from the weekly time frame. What kind of situation we have on the weekly? Now on the weekly, clearly we have a very nice impulse to the downside from a weekly perspective, followed by this retracement. Now if we want to measure this retracement, what are we supposed to be doing? Taking our Fibonacci from the high to the low of the impulse. And what we can see is that the market currently is rejecting the 0.618, aka the golden ratio Fibonacci retracement level. Just a quick reminder, make sure you comment below and you let me know which pairs or topics you would like me to cover in the next video. So a very strong weekly base, a very strong Fibonacci level, the 0.618. Now, if we check the structure around this area, what we can notice? We can notice that this a 0.618 Fibonacci level is in perfect confluence with very strong support here. Again, support, the market broke to the downside, turned resistance. Again, resistance, broke back above. This wick here went to retest the level, and now this is turned strong resistance. Now, if we know that basically the market has high probability from here to making a move to the downside, with this in mind, we can go down on the daily time frame. And on the daily, we already know which pattern we have. We already spoke about it. From here, we want to see the market make a move to the downside. So let's go and see what is the situation from a COT perspective. So what hedge funds are doing at the moment on the pound. And what we can see that with the last reports, they have been adding finally a lot of short positions, 3,800 short positions added from an institutional level on the pound. And what we can see that during the move to the upside of the pound, during this move to the upside, what was actually happening from an institutional level was that longs were getting closed. So minus 10K, minus 9K, minus 5K, minus 9,900, a lot of thousands of long positions getting closed. Does that mean that the market wants to continue higher? Obviously not. And that is the reason for which we actually wanted to see this break to the downside, if you remember, because if they're not adding longs, you want to see this support not really hold. I mean, we want to see a reaction to it, absolutely, but then we want to see the structure break. And in fact, the structure has broken to the downside. And we want to see now continuation to the downside. Now, is this enough to just open a short position? Because now you could say, everything is perfectly pushing to the downside. We can just open a short position. Obviously not. Why you can't be looking at a short immediately? Because from a 4-hour perspective, the structure of the market is still bullish. It's starting to break now, but it's still bullish. There is no confirmation yet for a possible short position. We have a thing that is called environment of the market. Now, I can't tell you how to read the environment because that is part of the mentorship program. And no, the environment is not just the structure of the market, like higher highs, higher lows. It's another thing. But at the moment, the environment of the market is still bullish. Students know exactly what I'm speaking about. And we can't be looking for the short immediately. We have to wait for the environment to change. So at the moment, everything is pushing to the downside. All technicals, if we look at the COT data, everything is pushing to the downside. Is the market actually ready to make the move to the downside? That is something that we will have to basically be checking from a 4-hour perspective. And in fact, that is exactly what we will be doing with students. With students, actually what we are already doing with students. With students, we are monitoring price action on the 4-hour time frame inside of this region, waiting for the market to shift from a bullish environment to a bearish environment, and then provide to us one of our valid entries. If the market will satisfy these two conditions, so shifting from a bullish environment to a bearish environment, and then providing to us one of our valid entries, then we will be taking a nice short with a very good risk to reward and very good probabilities for a nice push to the downside. On the other side, if everything will remain bullish, then the market basically from a 4-hour perspective will simply respect this M formation and make a nice push to the upside, break the structure. And at that point, what are you supposed to be doing as a trader? You're supposed to be adapting to the new market structure and be looking for the next opportunity where you have good probabilities and good risk to rewards, and be looking for a trading opportunity inside of that area, exactly as we have done here, because this is a game of probability and risk to reward. If you're able to position yourself in a situation where you know that you will have more, if all your rules are satisfied, you will have a more than 50% probability of winning the trade with 1 to 3 risk to reward minimum or more, like we do, then even if everything goes terribly wrong and you're right only 3 times out of 10, you will still be making money. Why? Because if you win 3 trades out of 10 with a 1 to 3 risk to reward, 3 times 3 equals 9, minus 7 is 2. So anyway, you have a 2R return over 10 trades if you're right only 3 times out of 10. And that is the power of having solid risk management, solid risk to reward, and understanding probabilities, and basically understanding the trading game as a whole, because it's all about this. If you enjoyed the video, make sure you smash the like button and comment below. It really does support the creation of more free education analysis for all of you, as well as going and checking out the mentorship program. You find the link in the description. It's a very complete program. You first get all the rules of my strategies, and then you trade them live with me each and every day. You get a new daily market breakdown showing you how to apply the rules that you already learned with entry, stop, take profit, as well as having me answering every question that you have each and every day. So I'll invite you to check it out, and the link is in the description, or go and check out the next video.